Hey there, YouTube family. It's Josh with Stocks with Josh. Wednesday is going to be a really big day in the market. We know the Fed is going to speak, and he is either going to be putting money in our pocket or taking money out of our pocket. I talked to you guys about this before. I personally see a reason for him to come out dovish. It is not because the market isn't in trouble. It's not because inflation isn't out of control. It's because the things that he says can move the market. We've already done a number of interest rates hikes. We have interest rate hikes ahead of us, and we need to let those work. I think he knows that they will work and that he needs to let them work. But being at the end of the second quarter, if he comes out and does the unexpected, or he comes out and is overly hawkish, it really is enough right now to negatively push the market unnecessarily down further, which I simply don't believe he wants to do. I believe that they've done a fair amount to address the monetary issues in the U.S. in the first two quarters, and I believe that right now we actually need a quarter where it's more neutral, where we move sideways, where we can just basically bide some time and allow these interest hikes to work. One of the comments in the comment section was, I made a comment about us moving into a recession in the middle of next year, and someone said to me, man, we're already in a recession. I wanted to address that. We're not in a recession. A recession is qualified by at least 2 quarters of negative GDP. GDP is gross domestic product. It represents basically all of the work of everybody in America and everything they're producing and the value of what they're producing. And so if that value shrinks, it basically means that the economy is doing less for whatever the reasons might be. And if it increases, it means that we're all working harder, we're producing more products, and we are able to sell more and make more money. In addition to that, the other factor that coincides with what qualifies a recession, besides GDP, is falling or rising unemployment, which we really don't have. We do have the beginning signs of some layoffs. Some corporations are trimming, but the fact is we have millions of jobs not filled in the U.S. at this moment. So no, we're not in a recession. But where we are at is a place of extreme fear. I'm going to talk to you guys a little bit today about some of the stocks I'm looking at trading in tomorrow, and also what are the big boys doing. So that's the topics for today. Before we begin, please, family, hit that like button for me. Invest in the like. Hit the subscribe if you're new to the page, and by all means, check in the comment section. Okay. So, on the moomoo app, there is a tab that says Explore. A lot of you guys have gotten moomoo, and in that, there's also, when you hit the button Explore, you come down and there's a section called Institutional Tracking. I want to show that to you guys real quick. So, here we are under Explore, and you've got Institutional Tracking, right? And so I spent the day kind of looking at what the big boys were doing. The Berkshire Hathaways, the Charlie Mungers, the Cathie Woods. What are they buying right now and how are they doing? I want to take a moment and comment that this is an environment of incredible negativity. I mean, on social media, YouTube, Twitter, and TikTok, I've just seen unbelievable. More content is currently being produced to attack somebody who was an influencer than there is content to help people make money and invest. And, the thing that I find interesting about that is the influencers aren't the problem that I see. You've got these, as I looked into moomoo and institutional investors, you really see people like Charlie Munger and Warren Buffett and Cathie Woods who have all the resources in the world. They have the best technical analysts in the world. And to be honest with you, they've made bigger errors. They've made bigger blunders and lost hundreds of millions of dollars for the people that they manage money for. So I just want to encourage you guys, stop beating yourselves up. Don't get caught up in the negativity. I am, in my mind, super thrilled about the market and the money that there is to be made for myself each and every day. I'm going to talk to you guys about some of the trade setups I'm looking at for tomorrow. it is still worth looking at what the institutional investors are doing. And I'm going to take a minute and actually do that with you guys. So again, in the moomoo app, under Explore, under institutional tracking, you actually have a long list of the big boys. Berkshire Hathaway is the first company. If you click on that, they will literally show you what they own. They'll show you that they're number one top buys in this current quarter. HPQ for Berkshire Hathaway, New Holdings, Activation Blizzard, F-Wonk. So literally, if you just wanted to follow them along, and kind of, you don't have to own Berkshire Hathaway stock. You can literally just see what he's buying and what he's holding. What are his top positions? But is it worth following these guys? So, I want to, talk a little bit about that. Charlie Munger basically bought Alibaba, made a big purchase in Alibaba, up here around the 220 mark, right? And it's dropped like a knife. So just because these guys are the big boys doesn't necessarily mean that they have, some inside knowledge or that they were prepared for this. I want to talk what's Warren Buffett doing, right? So we all know that Warren Buffett scooped up 3.8 million shares on the dip. So, he's adding to his Apple position, which is another, it's a blue chip company. And, and if you're wanting to stabilize your investment, then it's time to consider, entering into some stable stocks. I wanted to take a look at Alibaba. So even though Charlie Munger has been buying this and it's been dropping, an interesting thing that I noticed is that when he buys it, within the next 10 to 15 days, it really has jumped up. Now here, just the other day, he did buy a large position of Alibaba. And, and we have had a little bit of a peak up, but I believe that we've not realized it. Similar to this, where it sort of jumped up and pulled back, we are in that same boat right now. It's jumped up, it's pulled back. I will just let you guys know that Alibaba is one of the companies I'm looking at. I wanted to just point out where we were at here. The last time he made purchases around 144, and we saw it rise all the way up to 177. So I am seeing some positive opportunity, but let's talk about the institutional buyer who is the unofficial institutional buyer, Nancy Pelosi, right? So, Nancy Pelosi has, in this last quarter, bought $600,000 of Microsoft call options expiring in 2023, which, this woman is the only investor who has beat the retail investor and the institutional investors time and time again. So what else is she buying? I know it's been circulating. She's been buying basically Microsoft and Apple. She bought 600,000 shares of call, or $600,000 worth of call options expiring in 2023 for Microsoft, and $750,000 worth of call options expiring in 2023 for Apple. I'm looking at those two companies. The Nancy Pelosi, who never errs, is making those investments. Berkshire Hathaway and Charlie Munger have been buying in to these companies. So I'm watching the institutional buyers, but I'm not making my decision on that. But it does kind of encourage me when I see them make those moves, that it's just more confluence to my trading. Let me take you guys back here real quick to an offer from moomoo. Right now, if you download moomoo, if you want to take advantage of institutional tracking, these guys are competing for new customers. Moomoo and Webull. If you don't have one or the other, it is time to get them because what they're offering is just ridiculous. They're giving you 10 free stocks, potentially valued up to $25,000, as well as guaranteed money. So that if you download it and you put $100 in, you're going to walk away with probably a 60% increase just for putting $100 in. And you're at right now, this is limited time between now and the end of June. You're getting that extra share of Lucid, and you're getting basically 5 free stocks rather than 3 just for opening up your account. So tomorrow I am basically, my two number one purchases are going to be Baba and Apple. And I'm not buying at the open where the opening price is. I'm buying, hopefully if they dip. I'm looking at Alibaba. I'll show you guys that real quick. I'm looking at Alibaba to come back to basically this level right around $100 to around $99 as a point of entry. I'm looking for it to bounce off this moving average. And I believe that there is the opportunity. I'm going to be looking at taking profit between 125 and 130. I think that if we pull back, I'm going to buy, and I'm going to be looking for an opportunity to take profit. I'm not holding it all the way to 125, guys. If this bursts up and I can get a $5 to $10 move out of it, I will be closing that position. But that's basically my game plan for tomorrow. I believe it's going to be volatile. I'm going to take advantage of that volatility. I believe the Fed is. I am optimistic and hopeful that the Fed is going to come out dovish, because I believe that there is way more to be gained by basically encouraging the market that it's not as bad as it appears. Negativity and fear are peaking, and he has a responsibility to monetary policy, but he also has a responsibility to sort of pull us away from the edge of the cliff. So I just hope all of you guys do well tomorrow. As always, I appreciate you letting me be part of your financial journey, and I will see you guys in the next video, which is going to be about shorting. We're going to do that tomorrow. Thanks, guys. Bye-bye.